Peter Schiff is warning that US stocks are a ticking time bomb. But I think the better question is this: are the asset prices going up because everything is becoming more valuable, or the money is losing purchasing power? Because when inflation goes up, everything can go up. Energy prices can go up, food prices can go up, stock prices can go up, gold prices can go up. But that doesn't mean real wealth is rising. Higher prices not always means higher value. Sometimes it's a warning about the currency. Peter Schiff's argument is simple but controversial. He says US stocks are expensive, US dollar is vulnerable, and US bonds do not protect investors from inflation risk. So investors should actually look at gold, foreign stocks, commodities, and energy companies outside the US. Ray Dalio is warning about debt and devaluation. Ray Dalio's broader point was, when debt becomes too large for government to deal with, then government prints more money and devalue its own currency. So that supports Schiff's argument. If the debt is too high and the inflation is allowed to run, the real value of the debt gets reduced, but the bondholders and savers can lose the purchasing power. Inflation can quietly transfer the wealth from savers to debtors. Debtors reported that Berkshire Hathaway has a record $380 billion cash reserve. It's lying on the side. That doesn't mean that they're predicting a crash tomorrow, but that means the most disciplined investing machine in the world is waiting patiently at today's valuations. This is one of the biggest macro risks right now. If the oil prices are higher for longer, inflation is going to be sticky. And if inflation is sticky, Fed is not going to be able to lower the interest rates anytime soon. And copper matters a lot. Copper is used everywhere. It's used in construction, AI infrastructure, electric vehicles. Copper rises with oil. Investors pay attention because these are real world input costs. When commodities are breaking out, when inflation is already above their target, Fed is really in a bad situation. Here's my balanced take. You might not agree with Peter Schiff on everything. You can disagree with him on Bitcoin. You can disagree with his timing. You can disagree how bearish he is. Bigger warning is factual. Inflation is still above target. Treasury yields are still elevated. Mortgage rates are still high. Oil is a geopolitical inflation risk. Gold demand is strong. Central banks are buying tons of gold. Hathaway is holding a record high cash. The question is not if Peter Schiff is 100% right. The question is, what happens to your portfolio if he is even partly correct? I'm not a financial advisor. I'm just a mom trying to invest and build a future for my family.